So you want to figure out if KKR and Co.,
Hmm.
this global investment firm, should be a part of your portfolio.
Well, we've taken a deep dive into their financials, their recent acquisitions, and how they approach ESG to help you with that very question.
KKR has a really interesting history, a history full of these high-stakes deals and really strategic expansion.
Yeah, they were founded back in 1976 by Jerome Kohlberg Jr., Henry Kravis, and George R. Roberts. And they were real pioneers when it comes to leveraged buyouts.
And that culminated in the 1989 acquisition of RJR Nabisco, right?
Exactly. That deal really changed the financial world, and now they manage over $550 billion across a bunch of different asset classes.
Wow, that's incredible. So let's jump into their financial performance in 2023 because it was pretty notable.
They brought in $14.5 billion in revenue and $5.3 billion in net income, which is pretty impressive.
And their cash flow growth was really strong too, right?
Yeah, it was 37.87% growth, which is a really good sign for investors because it shows they can generate funds for things like reinvestment and dividends.
And that's good for us as investors because a strong cash flow means they can pursue new opportunities and reward shareholders at the same time.
Right. And their net margin of 45.64% and a return on equity of 13.21% just further solidifies the fact that they are not just growing, but they're growing profitably.
And they're not just sitting back and enjoying those profits. They're actively seeking out new ventures.
You're right. They're all about that.
And their recent investments in companies like Fujian Sunner Development, which is actually China's largest chicken farmer, really highlight their interest in these really high-growth sectors.
And that's a smart move, tapping into that rising demand for protein in Asia. I think that shows KKR's thinking ahead.
Yeah, I agree. They're not just looking at what's hot today, but what's going to be hot tomorrow.
And their innovation pipeline isn't limited to just one sector or another. They're really looking across the board for companies that are disrupting the status quo or tapping into new trends.
Yeah, companies that are poised for that huge growth.
Exactly. And, Zacks currently gives KKR a buy rating, and I can see why.
Yeah, their price-to-earnings ratio seems pretty reasonable, especially when you look at their growth rate.
Yeah, you get a PEG ratio of 1.7, which suggests that they're pretty fairly valued.
That's good to hear, especially for those value-oriented investors out there.
Oh, absolutely. They're the ones who are really looking for those steady returns and those dividend payments.
And KKR seems to be able to deliver on both fronts.
They really do. Their consistent cash flow generation is really the backbone of their ability to do that.
Now, their acquisition history, it really paints a picture of how strategic their growth has been.
It really does. In 2014, they bought Sedgwick Claims Management Services for $2.4 billion.
Which really expanded their footprint in that insurance services sector.
Right. And then in 2015, they purchased that British rail ticket website, thetrainline.com, and that marked their entry into the European transportation sector.
So each acquisition seems really carefully chosen to either build on their presence in certain markets or to open doors to completely new ones.
Yeah. And then in 2016, they acquired Epicor Software Corporation, which helped solidify their position in the software industry.
And they didn't stop there. In 2019, they went and got a majority stake in Heidelpay, which is a German payment service provider.
Yep. And that was a pretty big move, over 600 million euros, showing their commitment to expanding in Europe.
And then more recently, in 2022, they acquired Barracuda Networks from Thoma Bravo.
Yeah, which shows their interest in the cybersecurity sector, which has been growing rapidly.
And then just this year, they acquired Simon & Schuster from Paramount Global for $1.6 billion.
Yeah, which signals a move into the publishing world.
So all of these acquisitions together paint a really clear picture of a company that is all about diversification and mitigating risk. And that's something we as investors like to see.
Definitely, it shows they're in it for the long haul.
Okay, so now that we've got a good overview of their history and their growth strategy, let's talk about the pros and cons of actually owning KKR stock.
All right, well, on the plus side, you've got an experienced management team, a diverse portfolio, a strong financial performance, and a history of dividend payments.
But of course, we have to consider the cons too.
Right. Well, investors need to be aware that leveraged buyouts, which are a core part of their business, come with inherent risks.
And we can't forget about market volatility, which can impact their performance. And then there's the whole potential for regulatory changes in the private equity industry.
Yeah, all those things could impact their operations, so they're definitely factors to consider.
Okay, so let's dig into their dividend policy a little bit more.
Sure. So they currently pay a quarterly dividend of $0.175 per share, which comes out to an annual dividend of $0.70.
And that gives us a yield of 0.47%.
Right now, that yield might seem a little low to some investors.
But their dividend has been growing pretty steadily in recent years, right?
Yeah, you're right. It's grown 6.15% in just the last year.
Which I think can be really reassuring for those income-focused investors.
Absolutely. Consistency is key for them.
Okay, now let's talk share buybacks.
All right, well, their buyback yield is currently sitting at negative 3.16%.
Which means they've been issuing more shares than they've been repurchasing.
Exactly, and that could potentially dilute shareholder value, but it's possible this is part of a strategic long-term growth plan.
Yeah, that'll be something to keep an eye on.
Definitely. All right, now let's switch gears a bit and talk about ESG factors.
This is an area where KKR is really stepping up,
They've got this dedicated impact investing strategy.
which is focused on companies that are tackling some of the world's biggest problems.
Right, and they published their 2023 Global Impact Summary, which really highlights all those ESG initiatives.
And one thing that really stands out to me is their commitment to employee ownership.
Yeah, Pete Stavros and Nate Taylor, who are the co-heads of Global Private Equity, they've both said that they believe that employee ownership leads to better business results.
Which I think is a really interesting and progressive approach.
It is. It shows they're committed to stakeholders, not just shareholders.
Right, and they're thinking about the long-term sustainability of their business and the impact they have on the world.
Absolutely. They're not just chasing short-term profits, they're thinking about the bigger picture. It's clear that they really care about creating value for all their stakeholders.
And that long-term thinking is something that I think really sets them apart.
Yeah, and if you look at their acquisition of Simon & Schuster, it really makes you wonder about the future of media and how KKR is going to adapt.
That's a great point. I mean, if you look back at their history, they've been pretty good at recognizing those big shifts in the market and capitalizing on them.
Oh, yeah, for sure. They've gone from basically a private equity firm to a global investment powerhouse, and that takes vision.
And their early focus on those leveraged buyouts that really set the stage for their success, but they didn't just stay in that lane.
No, they didn't. The RJR Nabisco deal was a real turning point for them.
It was huge. It solidified their reputation and gave them the capital and the experience to branch out.
Exactly. And if you look at the acquisitions that came after that, you can see a pattern of diversification and strategic growth.
Yeah, you're right. So in 2014, they purchased Sedgwick Claims Management Services.
Right, which really broadened their reach into insurance services.
And then in 2015, they bought the Trainline.com, which gave them a foothold in the European transportation market.
Exactly. And each of those acquisitions seems really carefully chosen to support their long-term growth strategy.
Exactly like adding Epicor Software Corporation to their portfolio in 2016 that really bolstered their presence in the software industry.
Which is an industry that's been a major driver of innovation and economic growth.
Right. And then their expansion into Europe continued with the acquisition of HeidelPay.
Yeah, that showed that they're serious about tapping into new markets.
And then they acquired Barracuda Networks in 2022.
Which was a smart move considering the increasing importance of cybersecurity.
And then there's the Simon & Schuster acquisition this year.
Yeah, it shows that they have confidence in the future of publishing, even though the media landscape is changing so much.
So all of these acquisitions tell us that KKR is really good at identifying and acquiring companies with strong growth potential and a solid track record.
Exactly. They're not just buying companies for the sake of it. They're being very strategic.
And now they have this incredible portfolio that spans a wide range of industries.
It's true. They've got healthcare technology, energy infrastructure, consumer goods, you name it.
And that diversification is really key.
Oh, absolutely. It helps mitigate risk and allows them to seize opportunities across multiple sectors.
Right. And they don't just stop at diversification. Their emphasis on employee ownership is another thing that sets them apart.
It really does. They truly believe that giving employees a stake in the company creates a sense of ownership and alignment.
Which makes sense. I mean, when you feel like you're a part of something, you're more likely to work harder for its success.
Exactly. And that can lead to better business outcomes for everyone.
And it aligns with their commitment to ESG principles.
It does. It shows they're promoting fair labor practices and shared prosperity.
And their dedicated impact investing strategy further proves their commitment to tackling these big global challenges.
Yeah, they're looking for companies that are creating solutions for things like climate change, social inequality, and resource scarcity.
And they're being transparent about it too. Their 2023 Global Impact Summary lays out all their ESG initiatives.
Which is great for investors who want to see that accountability.
So now let's dive into their financial performance a little deeper, because that's where we really get a sense of their strengths.
Okay, well, starting with the basics, their revenue in 2023 was $14.5 billion.
And their net income was $5.3 billion.
Those are some really impressive numbers.
Yeah, they're definitely making a profit, and their cash flow growth of 37.87% is particularly noteworthy.
It really is. It shows they have the capacity to generate funds for things like reinvestment debt reduction and dividend payments.
Right, which
Yeah.
is a sign of a healthy company, and their net margin of 45.64% and return on equity of 13.21% are also really encouraging.
They are. It suggests that they're managing their costs effectively and using their assets efficiently.
Which all points to profitability and strong returns on investment.
And if you look at their valuation, it's clear that they're well positioned for continued growth.
Yeah, their buy rating from Zacks and their reasonable price-to-earnings ratio suggests that their stock is attractively priced.
Right, and their PEG ratio of 1.7 indicates that their stock price is fairly valued relative to their earnings growth.
So that makes them a really appealing option for investors who are looking for a good balance of growth and value.
Right, you get the best of both worlds. And when you combine their strong financial performance with their strategic acquisitions, it creates a really compelling investment case.
But we have to remember that there are risks involved with any investment.
Oh, of course. And with KKR, you have to consider the risks associated with their business model. Things like the inherent risks of leveraged buyouts, the impact of market volatility, and the possibility of regulatory changes in the private equity industry.
Yeah, those are all valid concerns that investors need to weigh against their own investment goals, risk tolerance, and time horizon.
Absolutely. You have to do your due diligence and make sure it aligns with your personal situation.
Okay, so let's talk about their dividend policy, which is really important for income-oriented investors.
Sure. So their current quarterly dividend is $0.175 per share.
Which adds up to an annual dividend of $0.70 per share.
And that gives you a yield of 0.47%.
Now, I know that yield might not be as high as some other dividend-paying stocks.
But the important thing to remember is that their dividend has been growing consistently over the past few years.
Right, their dividend growth rate in the last year was 6.15%.
Which is a good sign. It shows that they're committed to rewarding their shareholders and sharing their profits.
Now let's talk about their share buyback strategy, which is something that needs to be looked at carefully.
Yeah, their current buyback yield of negative 3.16% means that they've been issuing more shares than they've been buying back.
And that could potentially dilute shareholder value.
It could, but it's also possible that it's part of a long-term growth strategy.
Yeah, they could be using the money from those share issuances to fund new investments or acquisitions.
Exactly. So it's something that investors should keep an eye on and see how it plays out.
Now let's switch gears and talk about KKR's commitment to ESG factors, which is something that's becoming more and more important for investors.
It really is, and KKR is doing a good job in this area.
They have a dedicated impact investing strategy that's focused on companies that are addressing those critical global challenges.
Right, and their 2023 Global Impact Summary provides a really comprehensive overview of all their ESG initiatives.
And their approach to employee ownership is a testament to their commitment to stakeholder value.
It really is. It shows that they're thinking about the long-term impact of their decisions on employees, shareholders, and the community.
KKR's ESG practices are definitely a differentiator in the industry, and they're likely to attract investors who are looking for companies that are doing good while doing well.
Exactly. So overall, KKR is a company with a strong track record, strategic acquisitions, and a commitment to sustainability.
But it's important for investors to weigh those factors against the potential risks and make sure it fits their own investment goals and risk tolerance.
Right. Do your research and make an informed decision.
So now let's get into some specific examples of KKR's investments to see how their investment philosophy and approach play out in the real world.
Sounds good. Let's start with their investment in Fujian Sunner Development, China's largest chicken farmer.
This is a great example of their strategy to capitalize on the growing demand for protein in Asia.
It is, and it was a significant investment totaling $400 million.
Fujian Sunner Development is a really interesting company, and they have a vertically integrated business model, which means they control the entire process from breeding to processing and distribution.
Right, and that gives them a big advantage in terms of cost and quality control.
And their customer base is impressive too. They supply major fast food chains like KFC and McDonald's.
So they have a pretty stable and growing market for their products.
And KKR recognized that and saw the long-term growth potential of the Chinese market.
Exactly. They're not afraid to invest in companies that are meeting essential needs, and they're thinking ahead about global consumption trends.
Okay, so let's move on to their acquisition of the British rail ticket website, thetrainline.com.
This one was completed back in 2015, and it expanded KKR's reach into the European transportation sector.
And it gave them a foothold in the online travel booking market, which is growing rapidly.
Yeah, the trainline.com is a really popular platform in the UK for booking train tickets.
It's super convenient and user-friendly and allows travelers to compare prices and schedules from different train operators.
And this acquisition shows that KKR is smart about investing in companies that are using technology to disrupt traditional industries.
And they're positioned well to benefit from the continued growth of the online travel booking market.
Exactly. Now let's talk about their investment in Savant Systems, a company that specializes in lighting and electrical systems.
This one was made in 2014 and totaled $90 million.
And it shows their interest in the smart home technology market, which is another sector that's experiencing huge growth.
Savant Systems is a leader in this space. They offer all sorts of cool products and solutions that allow homeowners to control things like lighting, temperature, entertainment, and security systems, all from their phones or tablets.
And that's exactly the kind of convenience and innovation that consumers are looking for these days.
Right, and KKR saw the potential in that and invested early on.
Smart move. Now let's move on to their acquisition of A10 Capital, a commercial real estate lender.
This one was finalized in 2016, and it expanded KKR's presence in the commercial real estate lending market.
Which is a significant part of the U.S. economy.
A10 Capital focuses on providing loans to small and medium-sized businesses.
Which aligns perfectly with KKR's broader investment strategy of supporting companies that are driving economic growth.
And they're well-positioned to benefit from the continued growth of the commercial real estate market.
Absolutely. So all of these examples highlight KKR's ability to find and acquire companies with strong growth potential and a solid track record.
And they've done a great job of diversifying their portfolio across industries and geographies.
Which puts them in a good position for long-term growth.
Now let's talk a little bit about KKR's approach to managing risk, because as we know, every investment comes with risks.
Right, and as a global investment firm, KKR is exposed to a variety of risks, including market risk, credit risk, and operational risk.
So how do they mitigate those risks?
Well, they have a very comprehensive risk management framework in place.
Which involves identifying, assessing, and managing potential risk across all of their businesses.
Exactly. They have a team of experienced risk management professionals who are constantly monitoring market conditions, doing due diligence on potential investments, and developing strategies to minimize potential losses.
And they also diversify their portfolio across different asset classes, industries, and geographies.
Right. That helps to spread the risk and reduce their exposure to any single risk factor.
Their risk management framework is designed to protect their investments and ensure the long-term sustainability of their business.
And that's what investors want to see.
Now let's talk about their commitment to corporate governance.
Okay. Well, KKR has a strong track record of ethical behavior and transparency.
Their board of directors is responsible for overseeing the company's corporate governance practices, and they've adopted a code of ethics that outlines their values and principles.
Which is really important for maintaining investor confidence.
Absolutely. And they're also committed to environmental sustainability and social responsibility.
They have policies and programs in place to reduce their environmental impact and promote diversity and inclusion.
Which shows that they're thinking about the bigger picture and their impact on the world.
And their commitment to corporate governance is essential for building trust with their investors and stakeholders.
So now let's turn our attention to KKR's investment philosophy.
All right. Well, they follow a value-oriented approach, which means they're looking for undervalued assets with strong growth potential.
And they're very thorough in their due diligence process.
They use a rigorous analytical framework to assess the intrinsic value of potential investments.
And they're not in it for the quick buck. They have a long-term investment horizon.
They typically hold investments for several years to allow their investment theses to play out.
And that philosophy has been proven successful over the long term.
They have a really impressive track record of generating strong returns for their investors.
It's really impressive and makes them a really intriguing option for investors looking to get into this sector.
Definitely. But we should probably take a step back for a sec and look at some bigger trends and challenges that might pop up for KKR in the future.
Okay, so what are we thinking?
Well, one big trend is the growing competition in the private equity world.
Hmm.
As the industry gets bigger, more firms are fighting over
Yeah.
deals.
Which could drive up prices and make it harder to find those hidden gems, those undervalued companies with a ton of growth potential.
Exactly. So KKR will need to be even sharper when making deals using their experience, their global network, and their deep industry knowledge to get the best opportunities.
Yeah, it sounds like they can't just rest on their laurels.
Nope. They'll have to be adaptable and innovative. And speaking of adapting, we have to consider the regulatory environment.
Oh, right, because governments around the world are taking a closer look at private equity. And there's been some chatter about changing tax laws or disclosure requirements.
Exactly. And those changes could hit KKR's profitability or make things a lot more complicated for them.
Yeah, they'll need to stay informed and be ready to adjust their strategies if new regulations come into play.
Absolutely. Now, on top of that, we have to consider the global economic picture.
Okay, so what do you mean?
Well, things like rising inflation, supply chain issues, and geopolitical uncertainty, those things can create some headwinds for the companies in KKR's portfolio.
And that could affect their returns.
It could, so they'll need to be flexible and adjust their investment strategies to deal with those economic swings.
So it's not all smooth sailing.
No, but even with all that, KKR has some pretty unique strengths.
Okay, like what?
Well, their management team is super experienced, they've got a diverse portfolio, and they've shown they can perform financially. That's a solid base to work from.
And their commitment to ESG is a big plus too, right?
Oh, yeah. As investors get more and more interested in sustainability, KKR's focus on responsible investing could give them a real edge.
Yeah, and they've already shown they can adapt and innovate, which
Yeah.
is crucial in the investment world.
And don't forget their investments in areas like technology, healthcare, and renewable energy. Those are smart moves.
Right, because those sectors are expected to keep growing, and KKR is already ahead of the curve.
Exactly. Now, if you add in their focus on ESG, particularly that impact investing strategy, it makes them even more attractive to investors who care about where their money's going.
It's all about aligning your values with your investments these days.
It really is. So for investors thinking about KKR, what are the main takeaways?
Well, as with any investment, it's super important to make sure your goals, your risk tolerance, and your investment time frame line up with what the company's all about.
Right. KKR is in a complex industry, and there are a lot of factors at play.
So do your research really understand how they work and their investment strategy and weigh the potential risks and rewards?
You got it. And don't forget, talking to a financial advisor is always a good idea. They can give you personalized advice.
Right, because they know your specific situation.
Exactly. Now, we've covered a lot in this deep dive, but if you want to learn more about KKR or explore other investment opportunities, head over to our YouTube channel.
Yes, leave your questions and ideas in the comments and let us know what companies you want us to analyze next.
We love hearing from you, and we're always on the lookout for new companies to deep dive into.
Thanks for joining us on this deep dive into KKR & Co. We hope this info helps you make smart investment decisions.
We do. And until next time, happy investing.